Thinking about investing in an IPO? Then stop. IPOs can often be very expensive and can also be very volatile. With private equity funding available these days, companies are bringing in IPO much later in their life cycle, where early stage investors like private equity funds are already exiting and have extracted the value. Think about IPOs like Swiggy, for example, which corrected by 20% post-listing and corrected another 25% after their lock-in expiry. Even some of the blockbuster IPOs like Hyundai Motors, for example, listed below its offer price. And for every single such IPO out there are equivalent companies trading in the secondary market, which potentially have a much better track record to show and are often more profitable. Even in the United States, there are companies like Venture Global, for example, had a steep correction, post-listing at $24 and then correcting down to as little as $6. And there are a few words of caution out there. One, do not rely on grey market premium. It is entirely could be speculative, it could be misleading, and it is entirely unregulated. There are other word of caution is on the lock-in expiry. Post lock-in expiry, the early stage investors could dump the shares and could lead to steep losses for the secondary market buyers. So it's your money, protect your money, don't go by the hype, and do your research and focus on fundamentals. Thanks for watching.